expressed on the following sponsored program are strictly those of its host, guests, and callers, and are not necessarily those of this station, its staff, management, or sponsors. Welcome to the Real Estate Show, brought to you by Capital One Group, LLC. Eric Willner, president of Capital One Group, LLC, is a highly trained financial professional. He helps clients to develop strategies for effectively utilizing real estate, mortgages, and related financial products to achieve a more secure financial future. For the real estate investor or the home buyer, he's able to provide expertise in matching the right properties and financing with your specific financial objectives. This show is dedicated to helping you find the safe and simple approach to buying income-producing real estate. If you have any questions about the program or to arrange a consultation, call toll-free 888-595-7779. That's 888-595-7779. Now, today's edition of The Real Estate Show.
And hello, South Florida. Good morning to you all out there listening to us here in the AM 740, and especially good morning to all of those people who are following us out there on the internet. Today's a special day, not only because it's the famous hump day and a day with a cup of joe, as we usually have on Wednesdays, but today we are streaming our radio program live so that you can actually watch the radio show today. So if you'd like to tune in and check out what we look like while we're talking and just having a good time here on a radio station, you can check us out at WSBRradio.com. That's www.WSBRradio.com. And you can tune in and watch and listen as we start our radio program. So without further ado, good morning, Joe.
Good morning.
How are you today?
I am awesome this morning. It's another beautiful day here in South Florida, while the rest of the country is in sub-zero temperatures and figuring out how they're going to survive their day. We have another beautiful day here in South Florida, so what can we complain about?
Well, you know why? That's why I say every day here is TGIF, and for me, it's thank God it's Florida.
That's correct, and we got a lot to talk about this morning. You know, there's a lot of things going on out there, but really we got to get focused in on what people really need to do to get their financial house in order. One of the things we're doing to try to help educate people out there is we have these YouTube videos we've been doing, and they're called EPPY. My last name, E as in Edward, P as in Paul, P as in Paul, Y, Graham. So we're cutting epigrams, and we've cut them on HSBC with their money laundering. We've cut them on retirement planning. We've cut them on super PACs. Just all kinds of different financial topics and things going on in the universe that everybody needs to be aware of, that obviously the powers to be, as I like to refer to them, do not want us to be aware of, as they like to keep us very misinformed and very underinformed.
Well, that's the thing. We were talking about that, in fact, just before we went on the air, but I'm sure you'll be cutting another epigram on the new, what they're talking about, this Volcker rule.
Right.
And, you know, it's amazing. You know, you understand a lot about finances. I think I understand a lot about finances, and as much as I listen to the commentators and I read about it, it is so vague, almost intentionally vague, that it's not so much what is the new rule, it's what are you going to do about it, and how does it affect you if it does.
Right. Well, really all it does is affects the banks a little bit. It's telling them that they can't take our money because, again...
anymore,
right,
because they've been doing it.
Right, of course. And they're just saying that they can't take our money and do this crazy speculative stuff where they got, you know, in trouble, and now they're paying all these fines with our money.
Right,
so,
and they're hedging their profitability by using our money, trading it on the accounts, and so forth. And now they're not supposed to do that, but there's all sorts of exemptions in there. And then it's kind of like, you know, define, you know, self-trading.
Right, and define speculative.
Exactly.
You know, so at the end of the day, they'll be doing the same things. They'll just figure ways around it like they always have. It's kind of like that old cheese and mouse game. You know, they move the cheese, and the mouse finds it. Yeah, right, who moved my cheese? And the mouse finds it, and they move it again. It's kind of, you know, I've said that for a long time with long-term care insurance. The carriers keep reducing what they'll offer and scaling back periods of coverage and the benefits and all these things. And at the same time, we, as you know, we do a lot in the special needs market. And so one of the things that's really, really important is if you have a special needs situation and you're a parent and you're a caregiver at the same time, and you need long-term care, well, who's going to pay for the long-term care for your child at this point? So right now we have to do stackable reimbursement policies because there's no coordination of benefits. And what that means is that I could file the same $75 claim on 4 reimbursement policies and actually collect $300. Now, the insurance companies will eventually figure this out, and they'll start coordinating benefits like they do on health insurance. Right. You can't collect twice on the same health insurance claim. But right now, there's no coordination of benefits with inside a long-term care policy. So, they moved the cheese, I found it, and, they'll move it again on me, I'm sure.
But just to make that clear, so that's a great benefit for people if they understand what they can do, because they can provide better for themselves.
Well, sure. And I always say this every show, the it factor. It takes proper information and proper time to make good decisions. And bad decisions come from lack of information, lack of time, too much alcohol, and usually the combination of the three. Because alcohol, as I always say, makes us brave, and we don't think we need time or information. But when you think about your life, and I'm 52 years old, and I've had 2 heart attacks and 7 stents and a double bypass, so I've almost died twice, and it really changes your perspective on life. You learn to figure out the difference between issues and things that are really important and real problems, meaning that an issue is anything you can solve with time or information or money. Right?
And the bottom line is the things that matter.
Right.
That matter.
And a problem is something that can't be solved by those things. Something like cancer, right? That's a real problem. And so we need, to have the right perspective in life, that at the end of the day, all that really matters is the real important things in life, like family and our health. And again, as I always say, that's a lottery pick. I didn't sign up to have progressive coronary artery disease. So the second most important thing in our life is our financial health and happiness. And that, if we get the proper information, is very controllable and, frankly, very easy to do today. But people just don't take the time. I don't know if it's the fear of finding out the reality of it, but nobody really teaches us how money works in the real world. And, I listen to these shows and people talking on TV and the radio. I call them like the talking heads, because they really just talk in circles. They don't tell people that there's a difference between a fiduciary and a non-fiduciary. And we'll get into that in a little bit again, because we've done that before. But I think it's just really important people understand the difference from that. But they try to tell you that, they don't charge trade costs, but they charge a fee for managing your money. And if you're managing your money in a fee environment, well, what's the responsibility of the person that's managing the money? Do they have to do things in your best interest? Or are they simply... Which,
by the way, most people take for granted. Of course, if I'm paying them a fee, they must be working for me, right?
Right, but that's not that might not necessarily be true, because, the fees in one thing might be a little different than the fees in something else. But the bottom line is you want a fiduciary managing your money, because a fiduciary, by law, must absolutely do what's in your best interest, and
which is the definition of fiduciary. Most people don't even understand what the definition of fiduciary is.
Right, and it's to act like you are the person. And when you look at situations like non-fiduciaries, like the wirehouses that are out there, and you go to buy a bond, for example, they're selling you a bond out of their inventory. They're marking it up 3%, and they may still be charging you a fee to manage it. And then when you go to sell that bond, they sell it back into their inventory and mark it down, and you're paying a fee there, as well as, they may be charging you a transaction fee. Who knows if you're dealing with a wirehouse? The Merrill Lynch's, the Smith Barneys, the Chases of the world, Wells Fargo's. And so you have to be very careful that you're dealing with a fiduciary whenever you can.
So how can you tell? How can you tell if you?
Well, you have to ask. You have to ask for one thing. The toughest way to
just see. That Joe, he looks like a fiduciary, doesn't he?
Exactly. So it's really important that you're dealing with a professional, and that gets us into our second topic that I really want to talk about today, which is traditional planning and what it is and why it's not real. So because when you get into traditional planning, usually what happens, people lose their perspective. They do what I call piecemeal planning. So they go to one guy to handle the stocks and bonds, and someone else to handle the insurance, and someone else to do the tax planning, or maybe they do no tax planning at all. But it's the person that's doing that has kind of lost their focus, because what they're doing is, if you think about the beach, and if I got focused in on one grain of sand on the beach, I couldn't see the big, beautiful beach. So someone's got to look at the big, beautiful beach. Yes, you may need someone focusing in on that investment bucket that's in the market, but that's not the person that can be called your planner, because they've lost their perspective on everything else that's happening out there. Like, stockbrokers have no business handling cash for clients today, yet they do it every single day. So, traditional planning involves really two things: using averages to project out what you'll have in your buckets, Eric, at the end of the day. And then coming back before they even do that and asking you all your goals and objectives. And then they come back and tell you need to put more money away. So using averages is fictitious, and we're going to explain that probably after the break. And the second thing is that everybody already allocates 100% of their cash flow, and we're going to explain that before the break. So,
important point, too.
Right. Meaning that income has three bucket choices. It can go into bills or taxes or savings and investments. So everybody allocates 100%. You do, correct?
Absolutely.
I do. Everybody I
know. By
know.
definition, you do.
Right. You have to. You don't leave income sitting in outer space. And when I was in accounting school, they talked about interest off a savings account as the simplest bucket to put money in was a savings account. When they started teaching me how buckets worked, right? They talked about a savings account. And today, if you have money in a savings account, you're going broke very, very safely, which means your money will be there plus the interest on it. And it just won't purchase as much goods in the future. So you're going broke safely. You'll have your money, just each year you can buy less and less with it. So, but they said I had three choices with that interest that I earned, and that was to either spend it, and then it's gone, and the lost opportunity, put it back in savings and compound the interest, and we'll talk about that in a second. And the third choice was to put it in a different bucket. So they said to put it back in savings, and the reason for that was very simple, that you would experience the miracle of compound interest. It was like a religious experience, actually. And they failed to tell the most important part of the story, which was the end of the story, the exit part. And that is that each year that I make more interest, I pay more in tax. So if I'm already allocating 100% of my cash flow, why does it make any more sense to give more and more to the government every year? Unless you're just a big fan of the government. But I'd rather see
Don't know a lot of people that way.
Yeah, I'd rather see you give it to charity, because we can do much better work with the money in the community than to give it to the government.
Or your own families, which in today's market need it.
That's right. Yeah, there's a lot of people say charity starts at home.
Let's go ahead and take a quick break. We're about that point in our radio program. For those of you just joining us, you're listening to The Real Estate Show. And as usual, on Wednesdays, we have our special guest, Joe Eppy from the Eppy Group. We call it a cup of Joe. And today, of course, if you have access to a computer and you'd like to kind of watch us as we're having our conversation, our Wednesday conversation, then you can join us by going to WSBRradio.com. That's www.WSBRradio.com. We're going to go ahead and take a quick break, but we got a lot more for you. We got some very interesting topics coming, so don't touch that dial. Don't touch that keyboard. We'll be right back.
Are you paying for a home that is losing value every month? Do you owe $400,000 and your home is worth only $300,000 and still dropping? Do you want to know more about what the government is doing to help you? You have options. Don't just give up or walk away. Know your rights. Fight back. Fistel Law Firm can help you. Call for a free consultation today. 954-522-1212. 954-522-1212. Or on the web, fistel.com.
Real estate investors often call me asking the following questions, and maybe you find yourself asking these as well. I heard people own real estate in a tax-deferred IRA. How can I hold real estate in my IRA? can I enjoy the tax benefits of owning real estate anywhere in the country and not have to fix toilets and collect rent? How can I own real estate on the corner of Main Street and Main Street and have national chain of pharmacies or banks as tenants with an investment as low as $25,000? I'm running out of time on picking a 1031 exchange property. I heard that you can help me find alternatives like DSTs and quickly close on a good quality property for reinvestment. If you find yourself asking any of these questions, consider talking to my friend who is a financial advisor and understands diversification in the real estate market. Like real estate, investing in DSTs contains risks. So to obtain a prospectus, before investing, call or visit Mark Klein at Klein Financial Group at 954-764-2929. That's 954-764-2929. Or www.kleinfinancial.net. That's www.klinefinancial.net.
Today's real estate market is full of questions. Eric Willner and Capital One Group LLC have the answers. Call today for a no-obligation consultation and get the facts. 888-595-7779. That's 888-595-7779. You'll learn the safe and simple approach to buying income-producing real estate. And you'll find out how to get the right real estate investments for your specific investment objectives. Plus, you'll have immediate access to cutting-edge mortgage and financing products. Be sure to ask about free property management on select investment properties. Call today for your no-obligation consultation and get the facts. 888-595-7779. Toll free, 888-595-7779.
I said, damn, there's traffic jam. Well, there you are, sitting in traffic like thousands of other motorists listening to Eric Willner's Real Estate Show. Here's a thought. If you're listening, so are potential customers and clients. Radio advertising works. So become an advertiser or sponsor guest on Eric's show. Get your message heard. Call 1-888-595-7779. That's 1-888-595-7779. Your customers and clients are waiting to hear from you. Said, damn, there's traffic jam. Call 1-888-595-7779.
This is The Real Estate Show, brought to you by Capital One Group LLC in Boca Raton with your host, Eric Willner. If you have any questions about the broadcast, call toll-free, 888-595-7779. That's 888-595-7779. Now, back to today's show.
And welcome back. Again, you are listening to The Real Estate Show, South Florida's #1 and longest continuously running program all about real estate. And we're here with our special guest, Joe Epi from the Epi Group. And we've been talking about your money and what you should be doing with your money. Of course, ultimately the responsibility falls right back on our shoulders. It's up to us either to be very informed or to find someone who is.
Well, even if we find someone that's informed, it's important that you get informed because that person could be hit by a bus the next day. So education and knowledge is power, and so you have to gain the knowledge and then, of course, the power that comes along with it so that you can control your finances, and it's really pretty simple.
And control who you choose, because how do you know if you have the right person if you're not somewhat informed?
Well, you know when you have the right person. I was with one of the big personal injury attorneys in Boca yesterday afternoon. We were having coffee in the afternoon, and he was saying to me, you clearly know what you're talking about. I was with a real estate residential real estate guy yesterday for lunch, and he said the same thing. He said, you're hired, because there's a huge difference. There's a huge difference between looking at the 30,000-foot view and trying to pinpoint in on that grain of sand, as I was saying before the break. And the problem with traditional planning is the planners that are out doing it come from a place of great intention. And I know that, because most of us do. We come from a place of good intentions, but great intentions, but we can only execute to our ability. And our ability is very determined by our educational background. And when our educational background is controlled by the government and the for-profit academias out there and the big banks and Wall Street,
or the captive companies that of course, dictate what they're allowed to sell and how they're allowed to sell it.
Exactly. And as I've said before, we could have avoided the mortgage crisis just by educating to mortgages in college. We could avoid the student loan crisis by educating high school students to student loans. So we're working with Junior Achievement in Broward County. We want to create a high school curriculum that will be on debt management and financial literacy and student loan education, because financial literacy and relationship skills are not taught anywhere. No. And that's by design. That's why we have 56% of marriages ending in divorce, first marriages, and 75% of second marriages, and 85% of those are all caused by finances, by money. So when a planner comes to you and tells you you need to put more money away, and we know that's impossible, and then the second thing that's impossible is they're going to use averages. So let's explain why averages are not real. And I always like to say, math never lies, but liars use math to lie about what reality is every single day. And here's the proof of it. So if you handed us a dollar bill today, Eric, and I doubled it, you would have $2, and you'd be up 100%, correct?
Sure.
But if you lost 50% of your money year 2, and 50% of your money year 3, that in averages 100 minus 50, total 0, divided by 3, still total 0. So your average return is 0. So without lying, a fund can go out and say their average return the last 3 years was 0.
Right.
But your money went from $1 to 2 to $1 to 50 cents. So your real return was negative 50%. I sit with people every day that tell me they can make 10% long term in the market. And they can only if they don't come out at the wrong time. But when I take market history and I compare it to those results of a 10% return with even a 1% fee and 15% for the low capital gains rate, the results, when you actually copy and paste actual market returns over the last 10, 15, 20 years, is about 40 to 60% less than what you thought you would have. And it has nothing to do with when you went into the market. It has everything to do with when you come out of a market, meaning that if I put $1 in 1999, I do not have any permission to come out today because my results are horrible. But if I went in 1989 with that same dollar, I have all the permission in the world to come out today. So it has no bearing on when I went in, but all the bearings on when I come out. So the key with offensive buckets, as I like to call them, is you have to be able to put lids on them, meaning that at the end of the day, market buckets, real estate. In 2008, I was no different than anybody else. I lost equity in my home. I have a couple rental condos up in Orlando that I, lost value in like crazy. My retirement account went down in value. My non-retirement account went down in value. My bank stopped paying me interest. My business went down in value. The only financial pain I avoided in South Florida was Chinese drywall. And I know a lot of people out there did not, and I feel sorry for those that didn't. But here's what I know for sure. 2008s are going to happen again, and they're going to probably be more often and more violent. But I also know this, they're going to happen when I'm not working. See, you and I were not dependent on our buckets. And any of you listening out there today or watching that were not dependent on your buckets, it was just a paper crisis, right? You didn't really lose anything. And today you've recovered most of those assets if you just stayed put, if you put lids on those buckets in 2008. Right. The key for people that were retired in 2008, it was a disaster because they were dependent on their buckets. Had those people worked with someone like me who had the right defensive bucket set up, they would have never been forced out of the market in a year like 2008. So I have a Roth 401k that I fund, but I go into cash in the beginning of the year and I wait for the market to go down, which it always does. Now this year I break it into 4 piles. This year I've only invested 2 of my piles because we've only really had 2 drops in the market this year. Which is an incredible year that it's just been on this incredible ride up. But don't be fooled by that because the dollar keeps declining in value. So those gains are not real. Those are just a correction in the numbers because the dollar's worth less. And that's going on globally right now. So when we look at averages and how this money spends on the way out, which we'll get into next week, it's the most important thing to understand. But everybody out there is just focused on entrance strategy. And entrance strategies are not real. And
Well, and really, and let's just be very clear about it. A lot of times the reason you hear all about the entrance strategies is because someone's trying to sell something.
sure, that's how they're paid.
And that's where, exactly, that's where you always say, follow the money.
Right.
And if that's where they're paid, that's what's glamorous, that's what's being pitched. But what's not often told is that, you can buy a certain stock, a certain investment today. That's very glamorous. But what about when do I get out of that investment? And that's really the key question. And that's where you often need the help.
Sure. So, make sure, though, if you do want to reach us, you can reach us in our office at 888-563-3779, 888-563-3779. Laura will answer the phone, and she'll give you a real quick appointment for a 10 or 15-minute real quick phone call. There'll be no cost for that, no pain, and I promise not to tell too many bad jokes during that 15 minutes, but I will get you laughing a little bit about what's going on out there. It's, as I always like to say, you can't make this stuff up. So
very good, Joe.
Good week to you, South Florida.
Time, as we often are, faster than we expect. So catch us each day, Monday through Friday, right here. Until then, drive safe and make it a great day.
Thanks for listening to The Real Estate Show, brought to you by Capital One Group LLC in Boca Raton. Eric Willner and Capital One Group LLC are available to assist you with your financial needs. If you have any questions about today's program or to arrange a consultation, call toll-free at 888-595-7779. That's 888-595-7779. And join us every day at the same time right here on AM 740 WSBR, South Florida's Money Talk Radio. The opinions expressed on this sponsored program are strictly those of its host, guests, and callers and are not necessarily those of this station, its staff, management, or sponsors.